Mr. Yoon, welcome. How abrupt was the turn there? In other words, the March price appreciation numbers were an all-time record, 20% year over year in the 20 largest metropolitans. What went off there in April that caused these numbers that we just cited to go the way they did?
The price indicators are a lagging indicator. I mean, it's reflecting, the market condition about 6 months prior. What's happening is that mortgage rate really shot up, 200 basis point move from the early part of the year. Consequently, the lifeblood of the home sales market is getting hurt. So pending contracts, as you mentioned, along with new home sales, are now coming down back to the pre-pandemic sales activity after the huge surge of 2 years. So it's just inevitable that home price appreciation will slow down in the upcoming months.
Yeah, I mean, let's talk a little bit about that thing. What was it? Home listings, a 9% rise in listings last week versus a year ago. What does that tell you? Does that tell you that sellers or potential sellers are figuring this market has topped?
Well, it's implying that the worsening housing shortage is coming to an end. And it should be viewed as a welcoming news because consumers, they were just chasing after limited inventory. Multiple offers were prevalent, which was the reason for the strong price increases. But now with more inventory beginning to show up, and maybe some home sellers who were delaying and delaying when is a good time to list, now they're understanding that days of the fast price gains are over. And consequently, now they're considering listing, more inventory showing up on the market. Mm-hmm. But interestingly, whatever is listed is finding buyers quite swiftly. The days on the market is still very fast, less than 3 weeks.
That's remarkable, Lawrence. And again, it's borne out by a lot of the anecdotes that I know of personally. So we still have a high proportion of all cash buyers, and yet we're seeing the beginnings of some price cuts, aren't we? How do you think this push and pull is going to play out in the coming months for both the pace of sales and for prices?
Well, let's first clarify what the price cut really means. So the home sellers essentially listed their home 20% above last year's price. Now they are reducing it. So the prices could still be up 10% or 15% from 1 year ago. But the sellers are clearly recognizing that higher interest rate is essentially squeezing away some of the buyers. The multiple offers in some cases are not happening anymore. Homes are maybe sitting on the market, certain homes that are mispriced. So it just means that the sellers need to be very realistic to the market conditions. We have a shrinking buyer pool because of higher mortgage rates. But now the home sales are retreating back to the pre-pandemic levels. Let's hope that mortgage rates stabilize and we have the job growth to continue to provide some support for housing demand.
Exactly. It's such a different market from Lawrence. We remember especially speaking to you so much around the housing bubble and crash. And here we are again with another historic market, but a very different one as well. Thanks for joining us today.
Thank you.
Lawrence Yoon of NAR.